Howdy. Just made a video and realized I had no volume, and I apologize for the last one. I could barely hear myself, so I'll try to make a few adjustments, and hopefully this turns out a lot better. I'll try to be as clear and concise as I possibly can, and the next chart that we want to go through is Apple here. So, this is just on the daily time frame. I do have a couple things because I was working on it already. I'm just going to delete these out of here, and yeah, let's zoom it out. Let's take a look from the long term, and then we'll zoom it into the short term, and then we'll make the best possible decision. So overall, another good stock. I mean, looks a lot like TD overall. It looks a lot like the Dow Jones Industrial. It looks like a good stock. I mean, this would have been a good stock to buy and just hold for the long term. Overall, I mean, these are one of those. This is one of those companies that made it. I mean, it's the envy of everyone. I mean, so you can see here it just continually makes higher highs on the momentum, but even so, when it goes up, when it builds these high momentums here, when it starts getting overbought, it has a fall down, even though that it doesn't crash like some markets do. I mean, these are still relatively decently proportionate drawbacks. I mean, on a monthly sense, you don't realize that, well, these are actually quite a bit. It's almost like losing half. So from 100 to 50 here, that's how much that's lost. That's lost half its value. So these are good indicators. Like if you can save 50% of your money every time, just think how much more exponentially you will have at the end of all this. Each one of these too. These are really simple charts to look at in terms of long-term strategy. I mean, it's almost as simple as sell when these cross and buy when they don't. So I'm gonna just grab something here and say, what points are you talking about, man? Well, I like using these little elliptical things. Kind of clearly designates what I'm talking about. So you can say each one of these is a sell time overall in a month to month standpoint. I would have sold right here. I don't even know. I'm not even looking at what it would be. Look as we draw the vertical line down. I mean, let's just say we go after. Let's just say right here. We say this is the month, or right here to there. That's the month I want to sell. Well, you're going to save yourself a decent amount. Let's see how much. Let's see what it would be right to about. It's a little bit out of the way here, but let's say right about there. So that's 26%. I mean, in Apple doesn't just drop 26% out of nowhere. It's unheard of. So you could say you saved 26% if you would have just bought there. Well, when would I buy back in? What if I would have lost? Good point. If we, you could say sometimes when it crosses back here. I mean, if that was the case, you're looking at a much smaller profit save. Say we just use these exclusively. You buy when this and you buy when that. I mean, sometimes they might not be making you all the money. They might just you might just avoid the downside. But let's say that you sold on these ones, you sold right here, and then you use the different indicator to buy again. Let's say that you use this squeeze momentum divergence here, and you can see clearly as it's going to the downside, as this is still going down, the price is coming down here. Eventually, it gets caught. It gets caught, and there's a little bit of an indication when it slowly ticks back the other way. And right here, it doesn't look like a very aggressive ticking here, but it starts changing its idea right about here, too. It starts moving up and up and up and up. So anytime that you've seen a big move, you could say, oh, I could buy in right here. This is starting to look like it's moving pretty good to the other way. And rightfully so, you would have wrote it up, and let's say you bought right there when that momentum changed, 82% up. And then you could have said the same thing here. You could have been like, oh crap, it's definitely slowing off. It's not quite the step it used to be. And then eventually it go boom. What's going on here when it finally goes to the downside? Well, first red candle in a while. And you could save yourself, well, let's say from here all the way down to right here. It doesn't really look that significant, but you can see how these serve as pretty good points to enter and exit. Like right here, you use them all. You use all this data. You don't just use one indication and say this is that. Some people do that, sure. I mean, it kind of all goes together. The market sentiment, the technical analysis, your own fundamentals with this company. I mean, what are their earning reports? You guys know more about that kind of fundamentals about these companies, and no one's a stranger to Apple and its market dominance out there. I mean, we usually expect it to go up, but anything can go down in a downturn. And in this month-to-month setting, like yeah, we could say that it's never been this high. You know, it's never been this high. Um, you could kind of clearly say it had that tip in the staircase in this MACD, and yeah, it clearly made a descent down. I mean, the squeeze momentum here, it's been going up pretty steep here. I mean, for Apple, that's quite the gain. It's quite the run it's had. Look at this. 1, 2, 3, 4, 5 months in a row, Apple's been positive. Month after month after month, almost half a year. So this is quite normal to have a little bit of correction, but what's this next bar going to look like? Look at this. Look, it's not quite angled up anymore. It's definitely starting to think, is it time for a little bit of a correction? Usually it can't get too far away from this red line. I mean, it will. It starts going in the bull market, and yeah, it leaves off this red line. And not before it'll fail and kind of gain support and maybe shoot off for another little trend here. And then it comes back down, and well, here we go again, right? How much more could it go? I mean, this is one of the good stocks, so it could just trickle on for forever, for oblivion. But let's draw a couple more markers and just kind of talk around. This is talk, right? Let's just come up with some general ideas. Looking, zooming out. How much do we want to do this? So I don't want to do like 20 years of a parallel channel. So let's not make it unfair either. So I think I'm going to use something around here. Just kind of say that's the top because I like being a little bit humble and not overplaying these channels too much. I'm just going to correct that a little bit up here. So that's a pretty good channel right there. Um, I wouldn't really want it to jump out of this thing. I mean, you can suspect continual movement in here, and anytime it does, it's another indicator that, hell, if we just take a look at something like this, I mean, you could draw that channel to the upside, and, well, it... I hate when it does this. I don't know why it always does that. Maybe it wants me to draw it underneath. That's probably what it's asking for, but... You can see how they kind of, once it follows the trajectory of the channel, once it breaks it, I mean, expect a correction. How much are you saving right there versus when you bind back in? It's tough to say. It doesn't look like much, but like we've looked at, I mean, that might be 50% on this monthly standpoint, but let's just draw a somewhat tight channel here. Say we just hold it like that. Respect it a little bit more. So yeah, you could say, oh, I won't sell Apple till it breaks out of this channel. Look at the price though, 160, 170. I mean, you don't want to lose half your money getting down to that point. So this channel on this monthly time frame isn't quite as beneficial, but it's something else if you're really losing. I mean, maybe it's worth taking a look at. So let's look at a weekly time frame, and then maybe see if something like this might hold a little bit more true. I am going to draw it from the bottom because I think that's what they want. All right, so there we got this channel here. Yeah, I don't mind that. So in this sense, I mean, you could say, oh, it's got plenty of long way to go. Um, did I respect that channel there, or did I just draw it like this? Is this a bullshit channel? Just gonna see what drawing it from the top looks like. No, that's not very good. has to be that damn reason. Okay. Regardless, the channel I barely use it, but you can see the value in it sometimes. It's probably better in a shorter time frame, just like angling up here. So maybe if you look at this channel in a short time frame like this and say, hey, once it breaks out of this channel, I'm out of here. Have it as some type of guideline. Um, let's say we form one right here, a little steeper from right here to right there. Yeah, maybe this is actually a reasonably, like actually worthwhile looking at. So let's say, yeah, it's a little bit sloppy, but that's not too bad. Say we respect this channel, and it's basically right alongside here too. So in this shorter time frame, if it just breaks down here below this, not the best sign. Again, these have wandered away now. They're not as clear because we switched from the weekly to the monthly, so I'm just going to delete these. But again, well, these are definitely not very clear, as you can see them crisscrossing back and forth a zillion times. I mean, this is clear right here. This is a clear indication, I would say right there. October 15th, you could have saved yourself a pretty penny, but look at, you might have did it right there. Maybe saved you a cent or two. I mean, I guess when they're clearly defined, when it has more momentum to come down, when it's clearly concise, just like this one right here, these serve as better signs. I mean, this is insignificant to me. This is just not worth confusing yourself over. So when you look at something clear and concise like that, something clear and concise like this, and you know this is Apple, you look and it says, well, what's changed in Apple? Does Apple have a new person that runs it? Is Apple not selling phones anymore? What would cause this? Well, it could just be something stupid like them spreading fear all the time, right? But 40% decrease, that marker could have saved you. And I mean, right here, you could have got back in, and you still would have, let's say, what potential? I mean, well, you would have saved that, saved all of it. So you could say you'd either lose that. So what did you miss out on? Well, this is the additional gain you would have had. Well, that's not necessarily true. How would we do this? Should be smart enough to do this. We take the measuring tool. Let's just say 38%. Let me take this. 133%. So you still made, let's say, holding from right here to there, another 90 some percent, 90, 97, 96. But you can see the value, right? I mean, the more money that you have to reinvest down here too, like you're not losing it all. I'd have to get the calculator up. Don't seem as nimble on the mathematics this evening, so my apologies. But again, looking at those indicators, I mean, look at what's over here. Let's see if we can just bring it over here. Look what's over there. It's pretty clear and concise at the moment, and it's on a weekly time frame. So it's already broke one support. This is going down. Huge sell volume. Depending on how much you have, I mean, it wouldn't be crazy to say to sell right here, especially if you bought from a long time ago and you took profit. Now this decrease could be caught in a lot of places. I mean, and it could just keep going up. And maybe you waste your $9.99 trade fee both ways. But if you're handling a lot of money, it's probably not worth it. It's not worth it. It's just not at all. So, especially now, like with everything so overextended, you got to set a couple, let's say, just fail safes to say, okay, are we really going to have a whole market correction? Like I sometimes look at those bigger stocks and say, well, what are those going to do? Never mind the individual ones. Not having any real world economic addition to these type of decisions I'm stating. All it takes is something, right? I mean, the power to go out obviously is going to not be good, but for me, I don't want to just live in fear. I don't see any value there. So I would say you would react to this one if we wanted to set a couple stop limits. You take the previous high right there, 230. You can set another one at 246. But then again, yeah, looking at those two, definitely worthwhile to look at, and you'll see through all these different videos that I'll usually use them a lot. I mean, you got to. Now we'll look in a day-to-day sense. So the same kind of indicators hold true. I mean, now we're looking within just the last year. It's not zoomed out for the last 20 years or anything. I mean, we don't got a decade in scope. We got a year from right here. So Apple's done well this year, right? Like we said, it had 5 positive green months. You couldn't ask for more. Um, you could have said right here, I could have bought in on this little cross right here, a clear crossover. That might have been a good place to enter. Could have still sold right there once it kind of clearly started saying, hey, I'm coming down. Um, but again, when we get up here, looking at right something like right there, I mean, that might be a sign, eh? Maybe a sign to watch out. And you can see here, it tried to go down and it caught some bullish activity. And then I think it's just the global news pushing everything down. It didn't really matter what it was, right? Look at this big sell candle. So anyone that's trying to bring the whole market down is going to sell, right? So it's had a few kind of crappy days. I mean, it's better supported than some of the other ones we've looked at, but this is pretty turned to the downside. I'm just going to go back one set here. So yeah, when the blue crosses here, you can see what happens. I mean, the bad news is that this is clearly going to the downside already. How many more bars will we have? That's just the question. I mean, how much loss has it been? I mean, 16% from the all-time highs. You can see it's clearly broke both, and these are now approximating across. So it could be heading towards something like this, just a mild correction. Right here, down to here, and right there. So in that sense, I mean, you're only saving a percent or two if you buy and sell at those crossovers. Yeah, on the daily sense, it doesn't really seem like you should be selling that for these mild downswings in Apple. But that's if you don't break out of the channel. So you might see how that parallel channel can kind of give you a sense what's going on, right? So you see this downturn and then it clearly breaks the channel. It's like, oh crap, maybe we're not going to get supported as quickly as we thought. Get out of here. And yeah, it's all about the time frame, right? Any stock can look good in the minute, in the hour. I mean, it's or the day. I mean, when you start zooming it out and look for the long term stuff, that's when it starts becoming a little bit more realistic, hey? Because some of these downturns are a lot more significant, and I guess the last big one was the 2008-9 time frame here. 60%. And in a daily sense, it's all over the place, but you never know how far it's going to drop. And I guess when it's always at the top, I mean, how much more can it gain? That's sometimes the question you have to add. How much potential can it gain, really? Um, well, the thing is, looking at these, I mean, you can see it's been down lower. I mean, yeah, it was down lower back here at the start of 2019, or right at the end, right at the start of 2019. It looks like Apple had a pretty good depression right here. I mean, so that would have been a great time to buy right there. I mean, but who really bought here, right? I mean, that's when everyone's getting fear in the market. Oh, we're having a correction, and boom, we continue on. Nonetheless, to meet the all-time high. So yeah, this 230. I mean, you definitely don't want to see it going below that. And I think this 246 was it was more respective of the monthly time frame. And if you wanted to be a little bit tighter with your action, I mean, you could set something like that. I mean, let's just narrow it up a little bit so it's right on the top of this previous little bit of support here. I mean, it could act for resistance, or you could say as this moves through time, what's the chance it's just going to get caught in this kind of this channel here? So looking at Apple, it's very similar to some of these other ones. I mean, each person can set their level of risk they want to do, how many times you really want to buy and sell. But if you don't have any plan for when it goes down, it's not very good. You can't just hope and you can't just hold these things and hope that they go up forever. I mean, 5 months of upward moving is more than you could ever ask for in any traditional thing. So you got to just be lucky and take the profits when you can. And you might miss out on percentages here or there. I mean, but anytime you're buying low and selling high, I mean, you're doing well. So sometimes when you're looking at this, the real dilemma is that why didn't I sell already? I mean, is it worth selling right now when Apple has a good history of recovery? Am I willing to hold unless it's just going to be a real dump of the whole market? I mean, you can't really know when that's going to happen. They're always pumping in fear because that's when they make their money, man, right? I mean, they scare everyone else to sell and then they buy it up low. Imagine, just go look at the news. There's probably some type of, SARS right here. Everyone's panics. They buy it all up right here. Boom, they make it up. They say it's doing good. We all buy in here. Boom, goes down. And we wonder why the rich get richer and the poor keep poor. It's the motion of it all, right? I mean, you don't want to buy stuff when it's going down. And there's some of those phrases like don't catch a falling knife, and it is pretty dangerous to be putting your hand out right here and say, hey, fall on my hand, I'll catch you. So instead of catching it when it falls down, wait for it to turn around. Wait for it to turn around, and that's not always a guarantee that it's going to go straight up. Because you can see here, it just comes back down, right? So that's where you add in the fundamentals and you add in your confidence in the long term, and then you use these technical guidelines as some type of extra to make more informed decisions. I mean, you can't just go off of what the news tells you. I mean, then you're going to trade like everyone. So you can only make money by selling to someone else. So you got to act almost against the curve. And yeah, I think I'll just say again, I mean, when we look at these highs here and momentum, these are really good places just to get out, especially when we've already made profit. And I think anyone that's traded long enough can shake their head at themselves for not selling at the top after they made good decisions. And even in times when you've sold and it still went up, like you've usually not that bad. I mean, it's never that bad at heart. So you can see on this weekly time frame how I don't like Apple at the moment, and on this monthly time frame it hasn't quite turned around quite yet, but weekly it's starting giving us that indication. And the daily, well, hell, it almost looks like it's going all the way down. So how much will it go down? I mean, you could also use something like right here on the daily and say, hey, is this momentum going to catch right here like it did last time? Or are we looking at a more possible downturn right here, right? Right there. And do we want to ride? Do this the other way so you can actually see how much it is. Do we want to ride? This probably wasn't 40%, but that much in the buy-sell pressure. Do we want to ride that back down lower? So another one here. I mean, I wouldn't kick yourself if you made a good profit in this already and you didn't want to ride this potential downturn because it's going down. It's just how much is going down. you know, we're looking at just one of these previous little, descents, or are we looking at a bigger correction in the whole market? I'll let you guys be the judge. But overall here, I think, yeah, that's my little 2 cents about Apple. I didn't want to get into anything too intense. I think maybe I'm just going to delete all this stuff here, get pestered by these ads real quick, and maybe just do a quick, everyone likes doing these, right? Quick fib, and say, hey, yeah, you could easily pull back to the 382 and continue this run. So another place that people will be watching might be here for a bounce. That's if it's bullish. If it's not bullish, it might drop a lot further. It could drop easily to these regions. You see it all the time. It's another little predictor there. So, yeah, that's what I'll leave you for here with Apple, and on to the next one. All right, thanks for watching. See ya.